Yeah, it's one of our key investment themes going forward, particularly over the next couple of years, whilst we are seeing the readjustment of interest rates to a higher regime, which is sort of affecting the valuations in riskier assets. So we see a lot of opportunity now in private debt area, and we have implemented a capability in that particular area just recently, building it partly out of our private credit, our listed credit area as well. So that's a really strong investment theme for us at the moment, Mark.
Are you about to turn, though, is the question? Because, the picture right now is peak rates, right? They're not going to go any higher. And in fact, the next thing that could happen is for rates to start coming down. And that could trigger a lot of rotation out of things like private credit, no?
Well, there's a cyclical adjustment. There's a longer term strategic adjustment that has to happen in debt markets. So at the moment there is potentially an overshoot in the longer end of the yield curve. So we will see, perhaps in the coming months, some retracement of those longer dated yields. But more generally, we're not going to go back to the world of the decade post GFC, pre the COVID, with real interest rates, say in the US, stuck at 0.5%, for example. We're going to see a re-rating of real interest rates back to something closer to between 1.5 and 2%, we think, for, say, developed markets. And with that, the outlook for defensive assets, in particular debt markets, is going to be a lot stronger than what it was, so previously. Like the yield now is higher, and it's going to be, to your point, at the shorter end of the yield curve as well.
Okay. Matt, can you put your chief economist cap on for a minute? We just got South Korean October industrial output numbers. Big miss there. Should we be on recession watch for this region?
I don't think we're in recession watch. Certainly slowing down, but the recession is mainly because we didn't get in the region. It varies from economy to economy, but this region didn't have the same sort of run up and the same sort of issues in terms of stimulus, in terms of fiscal and monetary stimulus that you saw in the developed economies of the West. So this region got through the COVID period, also keeping most of their economies open, but without having to generate that same sort of inflation that we saw in the West. Consequently, the adjustment that's being made, the tightening of financial conditions, is nowhere near as dramatic as what is in the West. So we see the growth slowing, perhaps to a little bit below trend, but something like, for the region as a whole, Northeast, Southeast Asia region, slowing from a bit over 4% to something like 4%. Not too bad an outcome at all. Whereas if you look at the developed economies of the West, US, Europe, UK, all slowing to below 1% growth rates in 2024.